Hello all and welcome to another lecture in the world of risk. Today we have Tax Compliance Act as a topic and we will see one of the most important Tax Compliance Act of US as well as we will brush up the UK tax compliance. So let's get started. So Tax Compliance Act. So what is a Tax Compliance Act? A Tax Compliance Act refers to a legislation or a law or a act that is passed by a government or the authority to enhance tax compliance within the jurisdiction. So the main focus is basically to reduce tax evasion, increase transparency of reporting, and ensure that taxpayers are reporting their income properly and paying the appropriate amount of taxes so the jurisdiction can run properly. So you can find this tax acts everywhere around the world. So let's get ahead with one of the most important tax compliance act which has a global presence, the FATCA Act. So FATCA basically stands for Foreign Account Tax Compliance Act. So this was established in 18 March 2010, similar timings with the Dodd-Frank Act after the recession of 2008-9. So why was basically FATCA introduced? So FATCA was introduced because uh, many foreign nationals, US nationals, were having foreign accounts or foreign assets in different countries, and they were hiding their assets and income so to avoid US taxation. US was losing money on tax, and hence to increase taxation, they have introduced the FATCA Act. Now, these acts require foreign financial institutions to report to the IRS about financial accounts held by US taxpayer or foreign entities in US. So if they are not doing this, basically there are agreements within organizations or the governments that if they are not reporting and if the foreign institutions are found not to be reporting, then hefty fines are imposed, and also like sometimes 30% of the prof incomes that they are getting with the US is directly deducted, and hence they go ahead with this filing. Let's see the key provisions of FATCA. So the first is reporting requirements for FFIs. As we already talked, FFIs are foreign financial institutions. They need to report back to the US authorities or the IRS. Then there is tax withholding. Tax is calculated based on whatever the assets or the amount of income they are having. Then there are IGAs. So these are very important point of view in from the FATCA. Intergovernmental agreements. So this is where two governments come into agreement. Basically, one is the US government and another is the government from another country. They come in contact and they will sign some agreements where they will ensure like the reporting of the assets happen. So there are two models basically. The first is the model 1 and the second is model 2. In model 1, the tax authorities of the local jurisdiction, they or the FFIs of the local jurisdiction will go ahead and report the findings to the local tax authorities. These tax authorities will go ahead and exchange the information with the IRS or the US. And in Model 2, FFIs directly report to the IRS without any local authority involved. So the last provision is taxpayer reporting requirements, where they are needed to, US taxpayers are needed to report the requirements filed by the FATCA. So let's go ahead and see the next section. So which are the entities that are involved with FATCA? IRS is involved, the Internal Revenue Services, which oversees everything. That then there is the US Department of Treasury. Then we have foreign financial institutes. These are the actual parties that gather information and report. Then we have the FinCEN network or the Financial Crimes Enforcement Network. So they take information within the FATCA limits or use the FATCA information to combat money laundering activities and tax evasion. So let's see the next section. So how does FATCA ensure that this information is coming to the IRS or the US authorities? So they are using tax forms. So we have basically three tax forms: 8938, W8 and W9. Let's quickly go through it. So tax form 8938. So this is also officially known as Statement of Specified Foreign Financial Assets. This is a tax form in which US individuals should go ahead and report. US citizens like resident aliens or any non-certain categories are defined for non-resident aliens. They should go ahead and report their assets and the incomes. So this has two basic criterias: the filing threshold and the types of asset. So in types of asset, you can see they need, if they own any foreign accounts, foreign bank account, brokerage account, interest accounts, or say they have opened any partnerships or corporations or trust and have assets under them, then have foreign securities. So these kind of things need to be reported. And there is also a filing threshold. So what does filing threshold means is, after a certain limit of these financial assets, the reporting has to be done. Say, for example, for unmarried and single filing, it is around 200,000 US dollars. If you are married and jointly filing, then it's above 300,000 US dollars you need to file. So let's see the next important thing. Here is a sample of the 8938 form. This full form can be found in the IRS website. You can easily go ahead and download and check it out. So uh, people who are going for interviews for the FATCA related jobs, ensure to go to the IRS website and download and go through this form, because sometimes there are questions related to this form and the sections. So next is the tax form W8. So this W8 is basically like is a series of forms. So these cover both the individuals as well as entities. So who needs to go ahead with the W8 forms? Any non-US resident, and, those people or entities who do not have any US origin address. However, they are doing business in US or getting gains out of US, have dividend income, interest income from US. So these kind of entities and people need to go ahead and fill up the W8 form. So what is there are five types of W8 form basically: W8BEN, W8BENE, W8 W81MY, W8ECI, and W8EXP. So basically, just a short overview. W8BEN is for people with in normal people, regular people having non-US address. They need to fill this. W8BEN for entities. Similarly, let's go skip to the last one. W8EXP for the governments which are involved, or regulatory authorities or authorities who are involved with the US. They need to go ahead and file this form. So let's check the next one, the W9 form. This is also similar like a W8 form. However, this is filled by US personnels. They both entities and individuals which have address and which belong to the US. These the important part of a W9 form is the TIN, or the taxpayer identification number. This helps basically in identifying the party or the individual. So W9 form is not filed directly with the IRS. It is kept by the employer, or say for tax related purposes. So the main difference between W8 W9 is that the address of residence. So the key information is like the name, business name, taxpayer identification number, and certification where they need to go ahead and sign. So this is the tax form W9 structure. Now let's come to UK. So in UK we have DAC, or the Directive on Administrative Cooperation. This is similar to the US directives of FATCA. Here it focuses on automatic exchange of informations within the UK government and the foreign financial institutions. So number of points are here in the DAC. If you want me to cover those, do let me know. I'll go ahead and make a video. So these are the questions for the FATCA interviews that are asked. Pause the video and go through it. So these are very important questions, like what are IGAs? Can you describe the difference in IGAs? What are potential legal implications? How does FATCA compliance fit into cross-border? Name all the text form. So do pause the video and go through these questions. If you want me to make a detailed answers for this, do let me know in the comments. That's it for today. Thank you so much for your support. Keep subscribing. We are steadily growing and I need your support. Please, please view the video till the end. Thank you so much. Have a great day ahead.